Hi friends, recently I came across an article in Economic Times that the stock market could tank in 2025. Of course, this is one of the views, so I started digging for more data point and I found this survey done by CNBC where 61 fund managers, high net worth investors provided their opinion. And the results were that 30% people feel that more than 11% returns is what we are going to see in 2025 when it comes to Indian stock market. But majority of them, 38% people felt that we are going to see single digit returns between 0 to 9%. But more importantly, 11.7% voted that we are likely to see negative returns in 2025. Now here is some interesting data point for you. If we go back to last 10 years, you will see that the last time we got negative returns was in 2015. We got minus 4%. So it's been 8 years when Nifty 50 has delivered positive returns. It's been 8 consecutive years we have seen positive returns in 2025. And in fact, 2025 also started on a very positive note, because if you see my screen, you will see on 1st of January and 2nd of January, Nifty gained almost 2.3% in 2 days. And we started 2025 on a very positive note. But by mid-January, Nifty started to cool down and we saw Nifty dropping to 23,000 levels. $1,000,000 question. 2025, is it going to be a worst year for Indian stock market, or are we likely to see positive returns in 2025? In this video, I am going to give you simple 5 points that are extremely important if you want to get complete clarity about how the Indian stock market is likely to move in 2025. It's all going to be purely data-backed analysis. Also in this video, I will present to you some of the good strategies in terms of how to navigate stock market in 2025. If you're new to my channel, my name is Rahul Jain. Do not yet subscribe to my channel. Watch this video without skipping, and I am fully confident that if you watch this video without skipping, you're going to become a subscriber of this channel. With that confidence, let's get this video started. The first data point and the insight that we need to consider is US dollar index. Extremely important point, and I am trying to now correlate US dollar index with Indian stock market. Have a look at my screen, you will see how the US dollar index have behaved in the last 5 years. But the insight comes by overlaying Indian stock market returns on this US dollar index chart. So what you see on my screen is how Indian stock markets have behaved vis-a-vis US dollar index. You won't find this analysis anywhere. What we see here is that in 2021, when US dollar index was at the rock bottom, trading between around 90 to 94, Indian stock market gave stellar returns. 24% is what Nifty delivered in 2021. But in 2022, as you can see, US dollar index started to soar like anything, and it touched all-time high of almost 114 value. And what happened in 2022? Indian stock market Nifty only managed to deliver 4.3%. Low single digit return is what we saw in 2022. And then came 2023, when the US dollar index started to cool down, and in fact it remained range bound between 100 to 106. Nifty managed to deliver 19%. And finally in 2024 also, US dollar index after hitting 100 started to jump back up, but it remained in the range of 100 to 106, and Nifty managed to deliver 8% returns. So what does this last 4-5 years tells us? It tells us that there is a clear sign when the US dollar index is at rock bottom, which was in 2021, Nifty gave very good returns. But in 2022, when the US dollar index was all-time high, Nifty did not deliver good returns. So we can clearly see a pattern here that when US dollar index is very high, meaning if the US dollar is a strong currency and rupee is depreciating, which is what exactly now happening in Indian stock market in January, we are likely to see muted returns in Indian stock market. This is one of the biggest worry that experts will tell you. But please understand that before you make up your mind, stock market never depend on one single factor. That is why precisely it is extremely hard to predict anything in stock market. Stock market is a multi-factor model. That is what we need to understand. So there are few other points and factors that I need to explain to you to show you how possibly Indian stock market is likely to behave in 2025. life. Before I go to my next point, a big shout out to the sponsors of this video, Odoo. Odoo is a business management platform with more than 45 applications that simplifies and automate your business operations. For example, by using their invoicing tool, you can completely automate your invoicing process, saving you a lot of time and cost. You can create invoices in just few clicks by adding your customer details or by adding GST number, and it will fetch customer details automatically. You can then add product and services you are selling and any payment terms or timelines that you have with your customers. And that's it, you are done. The taxes will automatically get calculated based on the selling prices to make things easier for you. But the best part is that you can add bank account details to enable online payments. Once you're done, you can send the invoice via email or download it and send it manually. Through the dashboard, Odoo shows you the status of every invoice, and as soon as the payments are received, automatically the status is changed to paid. It can automate the entire invoicing and payment process so that tracking invoices is no longer a headache for your business. As such, Odoo provides multiple apps on one single platform, but your first app will be completely free for lifetime with unlimited hosting and support. If you want to transform your business, check out Odoo today. The link is in the description and in the pinned comments. Let's move to second very important point, which is the liquidity in the market. And liquidity in the stock market is provided by FIs and DIs. We all know that DIs have got very good liquidity right now. The SIPs are going up and things like that. But when it comes to FI, I want you to have a look at this extremely important data point that in 2024, there was a massive selling done by FIs, 3 lakh crores of selling done by FIs, and as a result, we got muted returns by Nifty 8.8%. Again, have a look at this data. 2022, 2,78,000 crores of selling done, we got muted return, single digit return of 4.3%. So the data tells us that whenever there has been heavy selling by FIs, we get muted returns. Of course, there could be some exceptional years, because please remember, two factors may not always have 100% correlation, but more or less the pattern tells us whenever there has been a huge selling by FIs, we have got liquidity sucked out of Indian stock market, and therefore Indian stock market has given muted returns, low single digit returns. Now, what is the position of FIs in the month of January? So far, I'm recording this video on 16th of January, and FIs have sold almost 38,000 crores worth of equities in Indian stock market. Is 38,000 crore less or more? If I show you the data, remember October 2024 when the market was bad, really freaky October is what we saw. 1,14,000 of selling done by FIs in that month. We are only 15 days into January and already 38,000 crore of selling has happened. And therefore, right now, Indian stock markets are under huge pressure. Whether it will continue or not, I'll come back to that, because one of the important factors we need to understand is why FIs are selling Indian equities. And let me tell you two reasons. There could be multiple reasons, but the two reasons. Number one is US 10-year Treasury bond yields. Important concept. Extremely important concept. Please pay attention and do not drop out from this video right now, because you're going to learn a lot in the next few minutes. Have a look at my screen and you will see the data from US 10-year Treasury perspective in the last 5 years. What you will note here again is that when the US 10-year bond are not giving great yield, so for example, in 2021, the bond yield was almost around 1.3%, 1.4%. Indian stock market gave almost what? Nifty gave 24.12% returns. Again, in 2022, when the bond yield started to go up, it went up to almost 4%. Indian stock market at the time gave only 4.32%. So generally what is said is that if US 10-year bond yield is low, then that means stock market is going to perform good. Even in US that happens. But if the US 10-year bond yield is on the higher side, FIs see that as a good opportunity. They may pull out some money from equities and put it into bonds. That is generally considered safer havens, and therefore we see liquidity going out of Indian stock market, and hence Nifty giving less returns, muted returns, low single digit return is what we have seen. Right now, if I speak about the data here, in January 2025, US 10-year bond yield is still elevated. It is at 4.65%. I don't know whether things will change or not. It will depend a lot on what Trump does in terms of the policy announcements and many other factors. But right now, if you ask me, stock market is under pressure, mainly because US 10-year bond yield is at elevated levels. Also, please understand that FIs do not just look at the bond data. They also look at where the growth is coming from all across the world. And have a look at this data. You will see that in 2025, as per IMF World, India will still remain the highest growing economy in the world at 6.5% GDP growth is projected for 2025. But during the 2025, how Indian economy will grow, a lot will depend on that in terms of FI's money coming back to India or not. Now you may say that, Rahul, why are you scaring us? Why are you making us scared of the Indian stock market? Why are you being so negative? I am not negative at all. I am simply stating the facts as they stand so that you get a clarity. And to be honest, I am an eternal optimist. I am the most optimistic person that you will see around. And speaking about optimism, let me now present to you two important factors that talks about that Indian stock market is likely to give, in fact, positive returns. But before I do that, if you're new to my channel, you can consider subscribing now. Also like this video so that it reaches out to more people, so that people get clarity, which is data backed. And if you also want to get exclusive data backed insights, you can consider joining my YouTube member community. I post almost on a daily basis on various assets like stocks, mutual funds, ETFs, and various other assets. You are going to learn a lot. The feedback of this community has been excellent. It will improve your investing game over a longer period of time. Simply go to my channel, click on the join button and be my guest. You will also find the link in the description or in the pinned comments. With that, let's move to factor number 3, which is the earnings of Indian companies. What will it look like in 2025? So fiscal year 24-25, we have seen muted earning, and it is anticipated or forecasted rather, we are going to see 6.8% of earning growth in 24-25. Fiscal year 24-25 is not yet finished. We still have one more quarter to go, but the chances are that we are going to see muted earning growth, which is around 6.8%. But come 25-26, which is beginning of 1st of April 25 to March of 26, we are likely to see 16.1% earning growth by Indian companies. This is Nifty 50 EPS growth we are talking about. Top 50 companies. Just imagine if top 50 companies of India can deliver 16.1% earning growth, what is likely to be delivered by mid-cap companies or small cap, because they grow at a faster rate in general, I am saying. So overall, this is a very, very positive forecast in my view. And if Indian companies are able to deliver very good two-digit earnings growth, EPS growth in 25-26, we don't have any reason to worry about Indian stock market. It will automatically fall in line. Forget about the FIs. Let them go away from Indian stock market. We are not worried about it as long as Indian companies deliver EPS growth. And right now, the forecast seems to be very, very positive. So in my view, this point tells us that stock market is likely to give us good returns. If not bull run, we might see positive returns in 25 depending on the earnings growth that we might see. A lot of these earning growths are also dependent on what Trump announces in terms of the US policies, also how the budget, Indian budget looks like in the month of February. So a lot of factors are still up in the air. Therefore, it is very hard to judge where the earnings growth is likely to be. But overall, the forecast seems to be 16.1% in 25-26. Let me now move to point number 4, which is a big positive in my view. Have a look at my screen, which is talking about valuation. So far, I haven't spoken about valuations. What you will note here is that pre-COVID, excuse my writing is extremely poor here, but pre-COVID, if you see, for almost 3 years between 2017 and 20, Nifty PE ratio was well above 24. And I can argue with experts here that pre-COVID, Nifty was at elevated PE level 24. Now, if you ignore this COVID period in the middle, and if you consider from January 22 onwards, Nifty PE ratio has been below 24 consistently. So if I were to make an argument, I would say pre-COVID, Indian stock market was more overvalued. Right now, we are undervalued. PE ratio of Nifty is below 24. So therefore, from a valuation perspective, I don't think we are overvalued at all. So from a long-term perspective, we look very, very good. Of course, there could be a month or so here and there when Nifty all of a sudden zooms to 26,000 and the PE ratio gets elevated. But that's very, very short-term view. From a valuations perspective, long-term historical PE tells me that we are definitely not a highly overvalued market when it comes to Nifty 50. Sure, mid-cap, I can agree. Small cap, yes, I can agree. But Nifty 50 definitely not overvalued. The past tells me that P ratio has been more than 24 for 3 years before COVID. Maybe that was the time when the elevated P's were there. Right now, I feel very comfortable when it comes to Nifty valuations. I don't know when you're watching this video in 2025. Maybe the situation might change at that time. Really depends on how the EPS will be for Nifty 50 companies. But this fourth point to me is a big positive. That is screaming out and telling me that we are absolutely fine. Stock market should deliver positive returns in 2025. So far, if you're liking this video, request you to hit the like button. Let me know in the comments a simple thank you. A lot of effort has gone into making this video because I've brought you a lot of data insights that are relevant to Indian stock market. So do give it a thumbs up and let me know in the comments a simple thank you. It definitely motivates me to continue to do good work for you. Coming back to fifth point, which is what is my view on the market? What is likely to happen in 2025 from my perspective? So this is not a recommendation, but this is my hypothesis, my personal view. I have money on the line as well in Indian stock market. I want to make simple 2 points. Point number one is have a look at this chart. What do you see here? This is the COVID period from January 20 to December 20. If anybody asked you in March 20 when the market was down by almost how much? In March 20 we had market down by 23%. If anybody asked you in March 20 that what will happen to Indian stock market in the remaining year, what would have you said? Bhai jao, so jao. That go away, Indian stock market is dead. Global stock markets are dead. COVID has hit the world. There is a big problem. But what happened in the end? In the end, not only Indian stock market recovered, in fact, it gave positive returns. We ended 2020 with 14.90% positive returns. Therefore, I am not worried at all. I am very optimistic about Indian stock market. But at the same time, I am being very realistic. You cannot just live in a fancy cuckoo land. You need to be really having realistic expectation in 2025. And in my view, 2025 is going to be full of volatility. We're likely to see a very similar market that we saw in October 21 and December 22. Have a look at this data. You will see full of volatility. Market is going up, market is coming down, going up, going down. We are going to see a lot of volatility because the four factors that I described in the beginning of this video, some of them are in favor of Indian stock market and some of them are not in favor of Indian stock market. It is a war of tug between those four parameters. Therefore, we are likely to see a lot of volatility in the Indian stock market. In my view, in 2025, I am hoping for positive returns in 2025. I am not worried at all. This is a volatility. It will play out. But more importantly, my last point, which is 6th point, how to navigate through the Indian stock market in 2025. Let me give you my view. Point number one is that, as I said, I feel that in 2025, we are going to see a lot of volatility in Indian stock market. Therefore, first thing you need to do is do not panic at all. I keep telling people, even on my YouTube member community, that there is absolutely no point in you panicking. Stock market is not under your control. What is under your control is picking stocks and picking assets that are showing very good earnings growth. So point number one is do not panic. And point number two is that pick up stocks that have consistently shown good earnings growth. At any point in time in 2025, my preference would be to pick a company that has shown and delivered earnings growth versus a company that is promising a lot of earning growth in future. Of course, there could be some exceptions because of a sectoral tailwind or whatever, but in general, that's the rule I'm going to follow. Point number three is that if you are a long-term investor in 2025, you are going to get a lot of opportunities where you can accumulate assets that you have conviction in. You can buy the dip, because in my view, in 2025, we are going to see extremely volatile market. It is not going to be a clear upside or clear downside. We will see volatility in the market. Therefore, accumulating the long-term assets makes a lot of sense, provided you know how to pick a stock and only pick the stocks that you have conviction in. It doesn't need to be a 20-30 sort of a stock list. Even if you believe in one or two companies, you need to continue to track them, and when the market hits the bottom, that's the time for you to buy it for the long-term investments. And last point, for aggressive investors, if you want to play along with the short-term volatility, in my view, if you see 15 to 18% of profits, book it, take it off the table, and then wait for the market to come down, because in my view, again, as I said, market will remain volatile. Again, it's not a recommendation here. It's my thesis. I've given you a lot of analysis. I could be totally wrong. I'm not a stock market expert. Exactly like you, I'm also a student of Indian stock market. Every single day, I try to learn something or the other new, and I try to share it openly through these videos. I hope you liked this video. If you did, Press the like button. Let me know in the comments. Simple thank you. If you also want to get exclusive content, you can join my YouTube member community. Lastly, a big shout out to Odoo to sponsor this video. You can check out their link in the description or in the pinned comments. It can do wonders for your business. With that, I hope to see you in my next video. Until then, keep rocking.